Vijay, how would you approach banks now? Do you think this dip on concerns of rates going up is a buying opportunity because credit growth is going to pick up this year? Or do you think this place will underperform and you need to be underweight?
The banks?
Yeah.
Yes, the banking sector has got underperformance going from I think the middle of December. The bank Nifty, if you see it compared to the Nifty, has been a very big underperformer. For the right reasons, because if liquidity is being sucked out and there is already a sluggishness in credit growth for whatever reason, maybe other revenues are available, banks are going to be hit in both ways, both in the treasuries and in the net interest margins. So it's a bit of a cloudy situation for banks, and we just have to see what really happens, whether the deposit growth is enough for them to get their margins. But the banking scenario is not as lovely as it was, say, in the second or even third quarter of last year.
Has the time come yet to start buying Telecom, Vijay?
Oh, no. It's strange. Telecom is normally in stock market, economics is about the safest. It's almost like a utility, but in India, it's just falling apart. Of course, when you talk to the telecom business magnates, they sort of shrug this off and say this type of competition comes. But, finally there'll be only 2 or 3 players left. You see the US, you see Europe, etc. But right now there is so much of EBITDA pressure and ARPU pressure, and these guys have invested so much in network and they have to invest in 3G. I don't really see people, buying telecom, at least for the first half of 2010.
Vijay, we saw some action in spaces like textiles over the last couple of weeks. Would you back any of these sectors where the rupee is part of the equation?
At textiles, I'm still a bit hesitant because they have recovered, talking to people, the garment exporters, etc. They're seeing very good order flows, but the profitability is not there. They're getting the top line, and government's also giving some incentives, but they're not getting the profitability back. So between two sectors which one avoided, namely auto components and textiles, one is much more bullish about auto components than textiles. Though I agree, if you want to be very contrarian, it's good to pick textiles over a 3-year time frame, but right now one doesn't have the appetite for it.
Any thoughts on the stock we were just talking about, Vijay? Bharti Shipyard, I mean a 30% move in 3 days for this one.
It's a very good company, it's a very unique company, and I think they're going to grow in a very big way because the shipyard industry is in its nascency in India, and as India gets globalized, this company has got an early mover advantage. So one has been watching their moves with great interest. So it's, in my view, a buy on every dip, though right now it has run up a bit.
Vijay, how important would this whole rate tightening spectre loom on the markets? If the bond yield does cross 8%, do you think it will have a major derailing effect on equity prices, or the market knows it's coming and therefore will negotiate it much better?
It will negotiate it, because with the IIP at 11.7 and probably GDP growth 7% and above for this fiscal and probably touching 9 next year, it will be a mistake to sing a requiem for the bull market. This has been at the back of everyone's mind last 6 months, Everyone knows that economies all over the world have been put on a slush of funds, liquidity by government, and at some stage the pullback has to happen. You cannot have the type of interest rate scenario we've had in the world last 1 year. So the pullback has to happen, and so people have been mentally preparing for this type of thing. China jumped the gun a little bit. The Europeans and Americans are a lot more calibrated about it. But the fact is, it's not something new. Liquidity tightening, we all have talked about. So in spite of that environment, markets have been going up. So I think it will act as a little bit of a break every time CRR is increased or, things like that. But I think with this type of global growth we are seeing, especially in India, things would be on the uptick most of the way through 2010.
You'd be a buyer of stocks though, Vijay, around this 5100, 5200 range for the Nifty, or do you think we could get better price points before the budget?
Well, probably one would like to wait a bit more before jumping in again. As I said earlier in this show, I think I am expecting a pretty robust jump before the budget, because one is expecting some policy initiatives also from the government. They are, I think, in a mood to do big things this time. But I feel that right now the immediate sentiment is very low across the globe because of what China has done. So I wouldn't be surprised if we sort of slip a bit, keep slipping a bit for the next 4 or 5 trading sessions. So probably we'll get good, nice opportunities.
Vijay, what do you think? All this China tightening, etc., can it spark off a meaningful correction to sub 5,000 levels Nifty, or that looks like an unlikely outcome?
Well, I hope not. But I'm a bit relieved that we didn't have a bit of a crash in the morning. Fearing that with Hang Seng down 500 points, etc. But, you know, with an IIP number like this at the back, you know, a comprehensive growth across segments of the economy, it's really heartening. And a person who is investing into India in the long term is not going to really sell off on fears of a rate hike or a CRR hike with this type of IIP. I think and the food inflation softening clearly on a week-by-week basis at least, we are looking at very good, positive macro data points. So I think that will stem the rot that might set in from global cues. So I think we won't fall too much, I think, though I expect that there will be weakness for the next few days till we get a global sort of cheer a little bit more.
You were talking about auto ancillaries earlier. What would be your picks here? Because that's a segment which has come back very strongly over the last couple of weeks.
Clearly, you know, and over the last 2 to 3 weeks, I have been talking to some of the auto component majors just to get a feel of what's going on. And I'm surprised at their robust optimism. And down south, you know, Sundaram Fasteners, it's a blue chip TVS company with strong managements. They have recovered from their bit of a fiasco in China. So Sundaram Fasteners looks excellent, compared to the highs it made in the last bull market. It's very low now. Nearer home to Noida, Subros. This all been my picks for a long time, and I'm seriously increasing my exposure to auto components, which I had not touched for about last 3 years.
Vijay, even if the market doesn't sell off significantly, is there a chance this entire mid-cap performance may sag for a while?
No, I think the mid-caps will do well, because the nature of the large caps in India, it's very crazy. If you look at the Nifty, they're all, some of these sectors like oil and energy, banking, power, metals, there are big question marks on all of them. Whereas if you look at the mid-cap universe, you get such undervalued companies, and these large caps, 20 plus PE anyway. So what's so great about buying these companies, people may ask. So I think it's still going to be a great stock pickers market. There'll be just that new name coming up, etc., etc. So this mid-cap beta-related outperformance, I think, should continue.
Thanks, Vijay.